Hi, everyone, and welcome to the Friday, April 22nd installment of the Silicon Insider, the only uncensored look at life and business in the Valley. My name is Mike Malone, and I'm here with special contributor Scott Budman. And by now, you know who we are. Once again, we are taping a Zoom call. Our producer is Jordan Henderson, our East Coast correspondent is Bob Grove, and our host is the Silicon Valley Business Journal. I want to get through all the preliminaries. We do this every week and just get right into the story. Big story of the week. The chip shortage is getting worse and worse. We've been talking about this for what, a month now, but boy, it's now really upon us. I mean, we've heard certain things that there's not enough chips out there because of autonomous vehicles and all the other new applications. Plus, this is now a global market. There's demand everywhere. Intel, we thought we were going to get some relief when Intel said, well, we're going to build a couple new $10 billion fabs. But now we know that's going to take 3 or 4 years to come online. We know that in the auto industry, they're starting to freeze assembly. I guess Ford's doing the F-150, the most popular vehicle in the United States, because they can't get enough chips, I think, in their engine controller, probably. So, I mean, it's getting worse. And now, here we go. Remember, we talked about how vulnerable we are to the fact that Taiwan is being, getting pushed around by China, and things are getting kind of sketchy over on the far side of the Pacific. Well, now we have another problem in Taiwan. Did you read about this one?
Yeah, and they have a big drought. We got the chip thing just today. Several automakers came out with warnings. Last night we had Intel's earnings, and as part of their earnings, they said this thing could last a couple of years. Things are looking thin in several areas, including Taiwan, where we really depend on for our chips.
Taiwan thing is a wild story. It appears to be that they're having a drought, and now it's coming down between the fabs versus farmers. I mean, that seems to be a thing, and we don't think about fabs using a lot of water, but they use an enormous amount of water, and they have to purify to a level cleaner than the water used to wash human organs during surgeries. I mean, that's how pure this water has to be, because you're working at the atomic level. Well, they're pumping water through, and now Taiwan's got this major drought. And so we could see fabs starting to slow down over there. This is a mess. I mean, our economy, the world's economy now, is built on semiconductor chips, something we often forget. I mean, we've said this many times that chips, everything in the world now is downstream from semiconductors. And this is like the oil crisis. If we start running low on chip production, to meet the demand, everything could slowly grind to a halt. This could cause actually an international recession. That's a terrifying thought.
Yeah, I mean, we're not hearing that much from the big chip guys or even the automakers, but as individuals, they are saying this is causing us to slow down production. And, I think you can do the math. And I think the big warning came yesterday from Intel, not so much their warning on earnings that caused their stock to drop. That's a 3-month thing. But when asked about the chip shortage, they said this is likely to last a couple of years. And this is the company that we're looking to for making more chips. And that's sort of their comeback strategy, right? To build new fabs and chips. They're saying we could be in this shortage for a couple of years. And this is something that we've just recently discovered after a year of buying a lot of hardware, of buying a lot of, these new fancy cars. And so for them to say that we may have to curtail our spending on some of these things, that's an interesting thought.
This reminds, it's starting to get the vibe. I mentioned the 80s, the shortage of chips, but this kind of reminds me of the oil crisis too. I mean, we now have a fundamental component of our economy in the US that we have allowed to get out of our hands. I mean, Taiwan makes 65% of the world's chips. I didn't know that. I didn't see that coming. I've never seen an article about our overdependence. I mean, we used to talk about overdependence on Saudi Arabia, and then we got a big reminder during the oil crisis. Taiwan now controls the world's chip industry, and we've let that happen, and we haven't maintained our domestic production. And now we got ourselves in a very vulnerable position. And I'm not sure we're going to learn from this one either. But this is going to, this is going to take a while. And one of the interesting problems that no one thought of was the pandemic. As it's ending, a lot of people have been driving, just driving their cars on the last legs because they didn't really need to drive very far. Now they need cars. And they're saying that there may be a shortage at the retail level of automobiles in the next few months as demand goes up and supply gets frozen. So we could actually have a car shortage, which, I never imagined that one either, but it's very interesting. We should never allow, we were going to go global. We moved everything offshore, built these enormous 12,000 mile supply chains, on the belief that, well, the system's so efficient now that we can actually have stuff made on the other side of the world. But this is a reminder that we've got to have domestic production of key industries, or this is going to happen again and again and again.
Maybe we'll have another sort of cash for clunkers stimulus, like that'll be the third or fourth stimulus down the line. And remember what that did, it not only got people in newer cars, but perhaps more importantly, cleaner cars.
Yes.
And, we got rid of the clunkers, got more fuel efficient cars. And, we've started to see, obviously, incentives for EVs. Maybe we'll see more of those as we come back. But then again, what do EVs need? They need computer chips. And then
and we have an example of batteries needing computer chips. You know about Enovix, right? Enovix is that Fremont company making lithium-ion batteries, mainly for phones and laptops and that sort of thing. They ran out of chips. And so they did something extraordinary. Remember I said as companies get desperate, they'll do anything to get chips? From, searching the world for them to criminal behavior or looking the other way and buying from the gray market. Well, Enovix did something I've never heard of before, and it's kind of emblematic of the moment, which is they actually hired a Russian transport plane to fly to China to get chips to bring to Hayward so they could finish, manufacturing these cutting edge batteries. And I thought, there it is. Russian company, airline, going to China to deliver chips to the homeland of chips because we don't have enough here anymore.
Yeah, I saw the picture.
Fremont's like 3 miles from Mountain View, where Noyce built the first chip. This should not be happening. I'll give them credit. Kudos to them. On the board of Enovix is T.J. Rogers, and I can feel he's one of the gutsier guys in town, and I can just see him saying, "Well, let's just do this." But it's a gutsy, brave call by these guys because, you got to get the product out the door, and if you got a major valuable product and it's missing one component, and you have to shut down your line, the rule is get that missing component, whatever it takes, and we're going to see a lot more of that.
We saw the world shipping slow down because of what happened in the Suez, and it's still kind of slow and backed up. And sometimes you just need a gigantic Russian transport plane to take care of business, I guess.
I wish I had been at SFO, waiting to get on some little, tiny plane flight up to Oregon and seeing this Antonov come roaring in, landing on, 28 wheels and all of that onto the runway. We're going to see a lot more of that kind of stuff. Kudos to these guys for coming up with a clever solution, but, that's not going to work forever. So we'll see. We talked about Intel. You talked about Intel a moment ago. The stock went down. It went down partly because of the chip advisory they had, but also because they're having a little trouble selling their, what is it? What do they sell? Oh, it's the big data center sales they're trying to get. They're kind of, they made the mistake of going after networks. They're now going after big data centers because they just can't play in the mobile game. They haven't been able to do that effectively. And now the big data market has gotten so competitive and demand is suddenly slumped. It just killed Intel stock. You think they're making the right choice?
It's hard to say. I don't see another way out of these things. We just talked about companies spending their way through crises, and Intel, I think, has to do that. And they've
Gelsinger said we're going to fight for every socket in those data centers from here on out. I like the ballsiness of that statement, but you know, is he just a victim of bad timing? I mean, he's come in, the company's in trouble, he's got a pathway out, and now that pathway looks like it's closing up too.
right. It's a heck of a time to say we're going to build more chips than ever, and then just go into the teeth of a chip shortage. And I don't know. I mean, I honestly think if Intel, and it seems clear that Intel CEO is determined to spend his way out of this, that may just mean acquiring companies. And I wonder if that means going really big and making a run at something. I mean, this would be crazy, but something like NVIDIA, or if it's or Qualcomm. I mean, goodness, these are companies with even higher market values. I mean, what do you do? But at some point, you've got to make a big move to show that you're still not only a leader, but a relevant leader. Look where all the headlines go. They all go to Qualcomm for phones. They all go to NVIDIA for cars and things. Intel is just not that, and AMD, because of what Lisa Su is doing, bringing that company back. Intel just hasn't been in the discussion for a long time, and that's dangerous.
Yeah, and there's a sort of marketing PR thing that if you have to only deliver bad news or respond to bad news for an extended period of time, your ability to regain the high ground diminishes with every one of those bad news announcements. And they're kind of in that mode. It's sort of it's sort of spiraling down. And I know he's trying to turn the company around image-wise too. And he's only got a few more months, I think, before Intel just gets labeled with loser company. And that's got to be keeping him up at nights.
Yeah.
So
again, he's got to make a big.
hang on one second. I have a Zoom problem here.
Oh.
Drop my notes.
Okay. Yeah, I mean, he's got to make a big move, and I think investors are going to get a little antsy because look where all the money is flowing. I mean, Intel had a bad day and a lackluster earning report at a time where the chip guys look at Lam Research stock price, look at Applied Materials, look at Intel, look at Qualcomm. I mean, they're just killing it. And Intel is sort of bringing up the rear as the old man in this, and they have to change that image, and that's a tough thing to do.
Yeah, and the chip shortage is not hurting the value of the stock of semiconductors. If anything, it's buoying them up. So to be contra-cyclical like Intel is right now, when everybody else is doing well, just puts you further and further behind.
Right.
I hope he finds the magic trick. The whatever he needs to get out of this mess. But he's got a hard road. Okay, Apple. New hardware.
Yeah, this was a pretty big release for them. New iMacs. They come in colors now. Once again, 7 colors. I think that's a nod to the fact that people are working so much from home, and so they're putting the high-powered machines in colors. They look good. Obviously,
Isn't this kind of predictable though? Every 10 years, Apple goes bland. And then every guy goes, oh, that's it's cool and hip and gray, so let's go with that. And then a few years later, they come out with colors, and people go, colors, finally from Apple.
Right,
forgetting
that. Right, it's important that this is not seen as revolutionary as the iMac itself. I mean, the iMac wasn't just a colorful computer; it was a real change in the desktop world. This is not a real change in the desktop world. This is just the iMac that has been selling moderately well, and people like it for a desktop machine, sort of as a nod to, okay, more of you are on desktops now because the world isn't quite as mobile, or hasn't been for a while. But, eventually it'll get back there, and we'll get some new laptops too. Now, we didn't get any laptops. We got an iPad, the iPad Pro, which is like 13 inches. It's very big. It also has the super fast M1 chip. But that's, Apple didn't do much to move the needle this time. I think they just sort of nodded to the fact that maybe your hardware is a little old and dusty. Here's some new stuff that moves fast.
Colors.
Yeah, in colors. And I think, it's interesting, in just sort of tweeting out the updates as they come, the one that got by far the most, the most attention was the Air Tags, which is the tile-like little devices that you put in a bag or in your fur coat or in your luggage, and your phone can track it. People are just going nuts about this, both on the positive side, like, hey, this is great, this is what I want, or hey, what about privacy?
Yeah. What about privacy? Yeah, exactly. I've seen
And with
I,
anything,
there's a fair amount of backlash this time. Apple usually gets the benefit of the doubt, but I saw a lot of people going, "Whoa, this is a bridge too far in terms of privacy."
right, and this is at a time when Apple is coming out soon with new iPhone software to protect your privacy, as in every time you're on an app, you have to give that app permission to track you. Good for them. That's a good privacy nod.
Good for them.
And saying, hey, by the way, you can put these things out there and track. So Apple has to do a better job of explaining why this tile-like device is not going to allow me to stalk somebody or somebody to stalk me.
Yeah, what it giveth, it taketh away. I mean, yeah. Netflix down, use down.
Yeah, that was a bit of a surprise, although, gosh, those numbers got so high. But look at the headwinds that Netflix has. A, it's been killing it for several years.
Right.
B, because it's been killing it for several years, you have intense competition now from Apple that we just mentioned, from Disney, Hulu, HBO has God knows how many channels that you can stream. Even the individual networks are getting in there. And so Netflix is.
You predicted this a year ago.
Well, it's just good business. It works so well for Reed Hastings and Netflix. Why not? I mean, the older cable companies and networks and even Disney type companies were a little late to the game, and so they're jumping in with size, with cash, and with a big catalog of movies and TV shows. So now you have so much choice.
And we're benefiting. I mean, this is actually capitalism working without government interference, without special tax breaks or anything else. And we're the beneficiary of it. I mean, I love seeing this. I love the fact that no company can dominate and set the rules. That even Netflix, as well as it's done, is being kept honest by all these other competitors.
Right. This wasn't a government intervention to say Netflix is a monopoly, even though it kind of was the default for streaming for a little.
Yeah, it got close.
But then other companies jumped in because, like you said, hey, it's capitalism, and it worked. You have a lot of choices now. I haven't really seen the prices come down. I mean, I must say the entry price for some of these, like Disney and Apple, is pretty low, and that's good. But Netflix eventually, if it wants to get those numbers back, I think is going to have to actually drop its prices. And I don't know what that does to the stock price, which has been, ludicrously high, really. But as a company, now it's facing a whole lot of competition from big companies that have a whole lot of library. I mean, think about going against Disney. That means Lucas and Marvel and et cetera, et cetera. Yeah. There's just so much content out there that it's, we're lucky as consumers, but at the same time, I feel kind of overwhelmed as a consumer.
I do too. One of the great competitive techniques, of course, is to keep improving the product as long as you can keep increasing the market. And as long as revenues keep climbing, you make the product better and more expensive and keep going that way. The moment that stops, you can't add another delta of improvement and increase revenues. Then you start cutting prices, which tells me we'll probably start seeing some bargain deals. Maybe not this summer, because people are going to be outdoors all summer long this year. But in the fall, I'm wagering we're going to start seeing some price cuts because of the competition. And we're going to benefit again from that.
Right. We know that Disney and Apple can afford to cut prices because they're so cash rich. Is Netflix now big enough where it can afford to do that? That'll be an interesting thing to see going forward.
Right. Okay. Capital gains. Stock market took a big tumble yesterday, mainly because it looked like Congress was going to go with the new administration's capital gains increase. Now, I got the information right here. Under current law, gains from the sale of stocks, mutual funds, and other capital assets that are held for 1 year are held at up to a 20% tax rate. 20% is for the wealthier taxpayers. We make over $400,000 a year. The details haven't been released yet, but the president has stated he wants anyone making more than $1 million a year to pay basically a 40% capital gains tax rate, twice as much as it currently is. And that doesn't include 3.8 percent surtax on net investment income, dividends, gains, etc. And that hits taxpayers with a modified adjusted gross income over 200,000 and joint filers over 250,000. Now, in Silicon Valley, that's most of your neighbors for that latter one. And you think about it, and all the angel investors in this town make $1 million a year. And that will bring the capital gains rate up to 43.4%. Now, the last time we had capital gains that high, I actually was writing about it. I wrote about it in the Wall Street Journal, was back in the late 70s and early 80s, which was, looking at historically, the doldrums period of new startups in Silicon Valley. There wasn't a lot of money floating around in venture capital. There weren't a lot of angel investors because the money was getting sucked up by capital gains. Nobody wanted to invest in companies because you couldn't get enough money back. You went into other places. You bought antiques or whatever, art. And, my fear, and I think the market's fear right now, is if this gets through, the Senate, and we go to one of the highest capital gains rates in the world, along with a tax rate, a regular tax rate, which is one of the highest of any industrial country in the world, we're going to lose not only our competitiveness, but we're going to start losing entrepreneurs. We're going to lose new startups, which are the lifeblood of the economy and of new employment. What do you think?
I've got a couple takes on this. I've been thinking about it a lot, and I realize they're not going to be popular. One, if Silicon Valley can't survive a capital gains rise, there's no Silicon Valley. Come on. We're going to be okay if some rich people have to pay more taxes. Two, and here's the way I think about this, the government has been trying to get companies, not to mention rich investors, to pay more taxes for a long time.
Right.
Not huge jumps. I'm not talking about, gigantic Elizabeth Warren things here. I'm talking about taxing the wealthy and getting companies to pay their fair share. The company's response has been, hey, we love you, Silicon Valley in America. We're going to move offshore so that we don't pay our fair share of taxes. So people will blame the government for a capital gains rise. I say, let's look at these companies that refuse to pay taxes in the first place. They are punishing their investors by making those investors pay a higher capital gains, because what's America going to do to get the tax revenue it needs? I'm really surprised that these companies, and they're going to fight back against this and say, oh, it's hurting entrepreneurship, but it doesn't hurt entrepreneurship for you to go to Ireland and pay taxes instead of pay in America? Come on, that's hurting entrepreneurship, that's hurting infrastructure, that's hurting America. And that's why the government's saying, how are we going to get our money? All right, this is a way to tax the rich. And yeah, it usually does backfire. I don't think a capital gains tax is going to encourage investment. I think it may discourage investment. Yesterday was.
We've seen millionaire taxes put in place around the country, and the governments, in this case, the state governments, always compute, we have 4,000 millionaires, and if we increase the tax rate 10%, then our revenues will go up $4 billion or whatever. And in fact, the revenues go up $1 billion because the millionaires either figure out a way to bury their money somewhere else or they leave the state. So the idea of massive increase in taxes is going to solve our economic problems almost never works. What does solve our economic problems is prosperity. I don't mind millionaires making millions of dollars as long as they turn around and they're investing it into the economy, because that creates new companies and those,
But
make the IRS stronger, make the SEC stronger. I'm all for both of those things when it comes to corporations not paying their taxes. But, prosperity is driven by new company creation and company growth. And, there's a lot of jealousy of rich people. I don't quite understand it, having been around enough rich people in my life. I don't have any envy for those people. But we know that when Reagan dropped capital gains, he slashed it. We had a boom in this town. It's not coincidental that Atari and Apple, and all those companies started in the mid 80s once there was investment money available again. And that the 70s, was four phase and Rome and these established companies moving along slowly. Very different reality. I mean, if we like the excitement of Silicon Valley, we need investors and we need angels. We need private citizens, rich private citizens, willing to, take these huge gambles on startups. And my fear is they're going to take their money and go and put it somewhere else.
Right. And why will they do that? Because every company that gets successful takes its money and goes somewhere else instead of paying their taxes to America. So maybe your idea of strengthening the IRS, maybe that's a good idea, because we need companies to pay taxes to America when they're working in America and not be able to have these offshore, tax havens that cost us trillions of dollars. That's why you're seeing this capital gains hike, not to discourage investment, but to try to encourage, America to get some of this money back. And you're right, I'm not a big fan of higher capital gains tax. I just don't know how you can allow these companies to still dodge taxes. And I think that's why they're trying to get this money back. And it's
I'm a great believer. Cut taxes, give people more money to spend, even corporations, but seriously enforce Sherman antitrust laws, sick the SEC on some of these companies,
There you go.
and the IRS as well. They shouldn't be getting away with murder and be getting special breaks. You get one or the other. So
Murder or special breaks.
or special breaks, yeah. And finally, we got one from Bob Grove back in Springfield, Massachusetts. Did you read this? Amazon is going into the beauty business.
Yes.
Yeah, they're opening a tech-driven new salon in London, featuring augmented reality consultations and styling services. It's the Amazon salon. Is located in Spitalfields. I always love the name of that one. Neighborhood of London, nice neighborhood, with 2 floors and more than 1,500 square feet. And you go in, I guess you're using AR technology to look at different colors for your hair and all of that. I mean, Amazon is literally going to be in every industry in the world in due time.
Yeah, and this is nudging up against facial recognition, which Amazon has been called to the carpet before, and those Alexa-like devices that look at you and say, maybe that's the right dress, maybe that's the right dress. It's a little too invasive for me. But then again, look at me. Obviously, I'm not going to the beauty salon, so maybe I'm not their target market. But look,
And if you've been to London, that's the perfect place to have a system where you can check out the most outrageous hair color
yes.
imaginable
Yes.
without any consequences. You can still walk out, or you can look at flaming chartreuse and say, "That's me." So that's it for now, folks. You can find us on the Silicon Valley Business Journal homepage, as well as on Spotify, Anchor, Google Podcasts, Apple Podcasts, and YouTube. Have a great weekend. Hey, you got both your shots.
Yes.
You going to go out in the world? You
Gradually.
Going out to gym
Not yet, gradually.
We'll see you all next week, folks. Bye-bye.